another episode of Bullish Chips, where we talk about chips and only chips, more specifically the Direxion Triple Leverage Semiconductor Bull ETF, which goes by the ticker symbol of SOXL. My name is Chris, and I just wanted to bring you a short video today to give you a rundown of how I set up my charts. It'll be a pretty quick video because my charts aren't too complicated. If you haven't watched the first ever video that I produced that tells a little bit about my trading style and my trading plan, I use a combination of the STRAT, which was invented by Rob Smith, rest in peace, and combined with basically just some common sense higher high lower low concepts, and it makes for a real simple chart. I do use Fibonacci's from time to time for like major movements. I don't like to use them too much because they can kind of fill up the screen, but they do give you very very good points of pullbacks, and you can even use fib extensions when you're in like all-time high territories and things like that to find targets to where you could be going, but use those on like major movements, but for the most part broadening formations in like a higher high lower low time frame. I'm not sorry higher high lower low concept type of trading. So the first thing we'll do, we'll just go through a top-down approach. This is how I approach any chart. I start with the year, I draw my broadening formations, and then I draw the what I consider to be the major fib levels. So the first thing we do, we've got to find, let's see, the second year the stock went higher, so we've got a high. Now we got to look for a low to lock in a high. So this never went lower, that did not go lower, that did not go lower. Let's see, this is $1, that's $1, this is 90. So this is the first candle where we went down. So this high was the highest high in this sequence before a low was put in, which means that this candle's low went below this candle's low. So before a low was put in, and now we need to find the next high in the sequence. So we go until we find the candle before another low was put in. So this candle is the last high before this candle breaks below this low. So that's our first broadening formation. Now, one thing I'll say as we kind of bring it back into focus, this cuts through a lot of price action. So, one of the rules of broadening formations is you don't put as much confidence in a broadening formation that's already been cut through, either way, up, down, or both. So this has gone through it a couple of times. So I personally am going to remove that. Cuts through price action, but I will take this high, this latest high in the sequence. Then there was that low, and we'll find the next high, which was 2022's high, and we've got our first yearly broadening formation. Now, I will color code these broadening formations so I know what they are. For the year broadening formations, I use white. So we'll change that to white. And we can see that we've never actually had a lower low, right? So we've never had, after this low, we didn't have any low that breached this low. We got close, but we never breached it. We got very close again here, this low being 621, this low being 723. But again, we made what appears to be another higher low. So again, low, higher low, higher low. What that does allow us to do, however, is drawing a trend line, an uptrend line. So from that low to that low, we'll change it to white, and change it to white. And for uptrend lines, I like to use this small dashed line. Okay. So we've got that. Now, so we went high and then it went low because we went below this candle. Then we went and got another high. So this high was locked in as a high because this low was put in, going below this. So we technically need to draw a downtrend line, which again I'll change to white. Now downtrend lines, I like to use the longer dash line. And there we have it. So we have a broadening for going up. So if we breach this downtrend line, we can use this broadening formation as a gauge to how high we might go, right? But we do have the downtrend line that we would need to respect as we approach it. Could it be, that we put in a lower high and we go back down and we just consolidate in between this uptrend and this downtrend? That could be possible, but it gives us some guidelines for the year. Now, the other thing I do like to do, forgot to mention this, is I like to mark the low, the 50%, and the high of the previous year's candle, just so I have a point of reference of where major price actions can take place. So for that, I'll bring out my Fibonacci and we'll mark it. Now what we'll do is we'll go in and edit it. We'll change the color to white so that we know this is for the year. For the low, I like to use the short dash. We'll take out the 38.2. We'll leave the 50%. We'll take out the 61.8. We'll leave the 100. And then we'll take off these fib extensions that I have here as defaults. We'll change this 50% to a larger dash line so that we know on the chart if we encounter it, we don't have to zoom all the way out and see like, oh, this is the 50% of last year. We know longer dash line is a 50%, smaller dash line is the low. Solid white line, we'll leave the high a solid white line, and you'll see how this comes into play, right? So now we know we basically got support from last year's low here. Also the uptrend and the 50-day moving average, right? So that gives us, a lot of things that you don't want to use just one indicator by itself. Me personally, I don't like to use a lot of trailing indicators. I mean, by default, I have the 50 and 200-day moving averages. That's something that you just want to keep aware of. I do have, I guess, volume, RSI, MACD. Those are, I guess, more default. I just don't mess with them. I don't really even pay attention to them. I could actually just take them off. But I don't like to use trailing indicators. The STRAT is more of a forward-facing indicator because it shows you where price can and most likely will go. But I will use the trailing indicator of last year's markers because those usually do signal bigger price movement. Let's just go to like the week chart and let's look at it from this perspective. So you can see this year we went up, we tried to test last year's low, we bounced off of it. If you didn't have this up here, what other indicator would you have for this horizontal level? I mean, you can eye it and you can see that was resistance at one point, somewhat resistance there before it broke through, found a little bit of support around here, then again was resistance. So yeah, you can tell that somewhere around here you're gonna find some action. But if you want specific levels, I mean, look at how specific this gets. Boom, directly off of it. Boom, directly stops directly there. Boom, stops almost right there. We get support with that wick right there. So it can be pretty precise. Again, you don't want to take one indicator as gospel, but when you start to see multiple indicators indicating the same thing, that's when you can really put more confidence in your plan. So now that we mapped out the year, I went ahead and went to the quarter chart, and we're going to do basically the same thing. right? So we're going to find the first high in the sequence. That's the highest high before, oops, let's get the right marker here. So here's a high before it went low. Now our next high would be here before it goes low. So this could be another broadening, but again, we see price action going through it. So do we really want to leave that out there? No. But that tells us where we need to start our next look from. So here's a high. Let's look for the next high in a sequence. That would be here. Again, we're cutting through price action. Don't want to leave it there. So now let's move it. We've got this high. Let's look for our next high. This will be here. Now we're going to leave this one here because, okay, yeah, we've got a little bit of price action that goes through it, but it's not full price action like we have the lines that were through here. We peeked through it, closed back around it, opened back around it, and dropped from it. So you can see it's respecting it. Now what I'll do for quarterly broadening formations or quarterly markings is I make them yellow. So we've got that. And we also need to look for lower broadening formations. So we've got a low to a lower low. Ooh, that gets really close. Yeah, I mean, we don't even really need this one on here because as you can see, that's going into basically negative price territory, which we're not going to go to. We can probably leave it just because, no, 0 is where, right here. I don't think we're going to hit this broadening anymore, so we'll leave it here just to reiterate the concept of what a broadening formation is, a low to a lower low, but that's really all we need to do there. What we can do then is look for our next broadening to the upside, which, so we could have a draw a downtrend line there. That was one, but we're past it. That's through it. But that does give us the high to look for. There was a low. Now we're looking for the next high, which would be here. Edit this, make it yellow, so we know it's a quarterly broadening formation, and boom, we've got it. So now what else we can do is draw our lower broadening formation from this low to this low. Since we did get a high here, that locks in that low. And let's see, make that yellow. And so we've got this our most recent quarterly broadening formation. Now let's see, does this, yep, that's a higher low, so that wouldn't do anything for us. What does this do? That's a higher low. That wouldn't do anything for us. I mean, it can solidify our uptrend line, the yearly uptrend, so we can draw in the quarterly one, which just further bolsters the uptrend line there. That's, again, we bounced off of it, and it's not something we drew after it bounced off of here. I would have already had this drawn because we've already been looking at SOXL, so we would have known when we hit this 3, we're probably going to go down to this level. The 50-day moving average is not too far from there. The 200-day moving average is basically it, that uptrend line. So a deeper, quicker, or I don't want to say quicker, but initial pullbacks usually go to like the 50-day moving average. The deeper pullbacks will go to the 200. So 200 lined up with the uptrend line, and we're in business. So we don't have anything else to look at on the quarterly as far as broadening formations is concerned. We've got those drawn, but just like with the year, I'm going to go ahead and draw in the high, low, and 50% of last quarter. So we'll change this to yellow so that we know it's for the quarter. We'll get rid of all the fib extensions, get rid of the 61.8, 38.2. We'll make the low short dashed make the 50% mid dashed. And I actually do like to label these, just, I don't even know why, but just cause. So there's our quarter. Oops, I forgot to get rid of this 38.2 fib. Alright, so we know where last quarter's 50% was, last quarter's high, last year's low was. Again, just important price levels that show greater activity. Now that we've got the quarter done, let's move on down to the month. So we should start to get in a few more broadening formations now. And, you know, really the ones further back aren't going to be quite as important, but we can still draw them in, especially if they're reasonable. So we've got this high. Sorry, I got to get the right tool here. So we've got this high, and we're looking for the next high before a low. So that would be there. Do we really want to draw that in there? Probably not. But we can kind of leave it because the price action was very thin. Big shot up, a little delay, and a big shot down, back up underneath it. And then it was respected again there. So this is one that, even though price action did go through it, you got to look at what type of price action. And if it's just straight through, straight back down through, you may want to go ahead and leave it out there. People got a little, you know, this was the end of 2021. Things got really carried away in 2021, and we know what happened in 2022. So this could have been considered the right broadening, and just some euphoria pushed us up and over. So I'm going to leave this one out here. Now, would we want to leave one like this out here? No. I mean, we're never going to hit that. So we go ahead and remove that. And we bring in more reasonable broadening formations. So there, we don't have anything there. And again, I'm not going to go back too far, because even if we go here to here, it's just further bolstering the quarterly and the yearly broadening as well. So I mean, I'll leave it out there for the purposes of this video, but it really makes no sense to have them out here, you know, going here to here. We're never going to hit that. So these older ones, they're the older broadenings are either going to cut through price action that we've already gone through in a more substantial way than this thin structure, or it's going to be way, you know, out of the league, out of our league. Or not out of our league, but out of it's not going to be a target for us. It's unreasonable. It would be the word for it. So if we come back in here, okay, we've got a high. If we were to go to the next high, that would go there again, cutting through price action. So we're not going to put that one in. Then we got this high going to this high. It might be reasonable to leave this one. It didn't really poke through it that hard. So we'll go ahead and leave this one out here. That gives us another high to go off of. So high to the next high. This one we're definitely going to leave out there because it did respect it already once. Oops. What happened? Gotta make sure we get the right color. That's green. My month markers for the month are green. So we've got there to there, here to here, just further bolsters that broadening. All right, so this is looking like a major target on a longer term upside for us, especially the further on in 25 and possibly 26 we go, where this starts to converge with the yearly broadening formation, right? So what we do need to make sure we do though is get any lower broadenings. So we've got the upper ones up until like mid 2024. Anything here, this is uptrend. You know, we broke through that, so we're not going to leave that out there. This to this is higher. It's an uptrend as well. Not, you know, because I'm more of a broadening formation than trend trader, I'm not going to leave that one out there since we broke through it. We go to this low to this low, though. However, that further bolsters that quarter broadening. All right. And again, that's going down to 0. So I don't think we'll hit that. We've basically hit it, and established the monthly broadening, even though the quarterly was there as well. If we go from this low to this low, we can see, boom, boom, that's the month, right? So in August of 2024, really October 2024, when this 2 up locked this August candle in as a low, this broadening would have been drawn. So boom, boom. So once we went up and failed the 2 up, messed around and went sideways for a little while. Once we triggered to the downside, we knew we could use this as part of our target to the downside, right? Entries for longs, selling calls up here, buying puts up here, entries for longs down here. So this again converges with the yearly uptrend, the quarterly uptrend, the 200-day moving average. It gives you, again, we're not using one indicator, we're using multiple indicators that independently point to the same thing. We're not using one to influence the other. If we look at them, each indicator in a bubble, that's directly where they're all pointing to the same location. So we've got that drawn in. This low. We could draw that broadening, but we're not going to, because again, that takes us into negative territory. I'm leaving this one here because it should have, if you're looking at the charts, if we were looking at this back in October, this would have been drawn. So we would have, in here in April, we would have known that we should get a bounce here. We'll leave that one there. Downtrends, okay, we broke that one, but we're still under this one. And in fact, right now, and again, we'll make it long dashed to signal a downtrend, make it green so it's a month. But we can see that's where, so if we look at, the daily, even just the 4-hour price action, here's that downtrend line. What did it do? 2 days ago, it bounced off, it rejected off of it, right? Today, intraday rejected off of it. So you can see there's a battle here. And again, it lines up with last quarter's high. This is also last month's high. So it's multiple indicators showing you where there's going to be some resistance, where you can expect some chop, where there might be a reversal for a pullback. Not using one indicator, but using the multiple together. Let's go back out here to the month chart so we can finish drawing in any broadenings that we may need to draw. It looks like that's it. Yeah, that's it for the month. Just like with the quarter and the year, we're going to go ahead and put in our high 50% and low. Alright, so we take our fib extensions off. Take this 61.8, 38.2 off. We change this to green so that we know what's what. We change the low to this short dash line. We change the 50% to the medium dash line. And there we have it. Last month's 50% high and low. Alright. Let's move on down to the week time frame. And again, these high 50% and lows, these are so when you get in on smaller time frames. Let's go back to the 4-hour. And we're looking at this. We're not thinking, what is this line? What is this? We know that since it's a totally, a horizontal line, short dashed in white color, that is last year's low. I don't need to zoom out to look at the whole fib. I don't need to zoom out and find my bearings or anything like that. I know that if I'm trying to just look at something on a 4-hour time frame, this could be a good point of support. Our 50-day moving average is moving up to it. It's last year's low, which is major price action in general. So if we get a pullback, we could expect that this could be a good bounce point. It was already a bounce point once after the first breakthrough. This is the retest. It showed support, and it could show support again. All right, so let's go back out to the week, and let's take care of our week Fibonacci's, on the week time frame. And we're gonna, now that we're in on the week time frame, we're gonna kind of more concentrate on the week. On the more recent time frames. There's no real point in us getting fibs from all the way back here. Most likely they're going to coincide with the month, quarter, and year broadenings. And so we just want the most recent price action. So we can see we've got, if I can remember for once to get the right marker, there we go. So we can see we do have one right here just off the bat. For the week, I'm going to use this purple color for any week indicators on the week time frame. Again, this would have told us back, let's get the color. This would have told us back, early January, that if we go up and come back down, you see this also tested that monthly downtrend. We could use this as a guide to lead us to the monthly broadening, or this as a guide to lead us to the uptrend line for the year, or the uptrend line for the quarter. Right? So again, all of these things, not one indicator telling us what to do, but using them together gives us a better idea. So now let's see, here's another broadening on the week perspective, and you can see how price action is somewhat trying to accept this and actually edit Fibonacci's. We don't need the coefficients because we've got the dash, the short dash, the long dash, and the solid line as indicators. We don't need this to tell me this is the high, right, with the 100%. Let's go to, let's take it off. Right? So that allows us to see this a little bit better without the coefficient there. But we can see we're poking through this. Could be blowing it away. This is a broadening that's nested within a bigger weekly broadening. So if we break through, our target is the top of this weekly broadening right here, back up to the 70 level. It's, again, a lot of things just pointing to the same areas. It's how you can develop a good trading plan. So I don't think we really need any more weekly broadenings. We've clearly gone past that downtrend line, clearly gone past that downtrend line. We don't have any other ones. We can draw like a uptrend line right here, a weekly uptrend line. Okay, so there you have it. That's kind of as messy as it gets. That's all you really need to know. Now, if you're gonna get in and scalp and day trade, you can do the same exact thing on lower time frames, right? We've got high there. This for 4-hour broadenings, I use this gray. Boom, there's a 4-hour broadening, right? Here's the downside of the 4-hour broadening. This can be done on any time frame to give you a guide as to, during that type of trade, where you should be looking for support, resistance, and things like that. So I'll take these off of here so it's not too cluttered. But it's basically as simple as that. Let's go out to like the week chart. It's great when you're going to swing something. You want a call for a couple months out, 6 months out, 8 months out, something like that. You got some good guides. Now, the other two major broadenings that I do like to bring into picture are the 2020 low to the 2022 high in tech. At least tech topped out in 2022, the first week of 2022. I believe S&P topped out the last week of 2021, but tech went 1 week further. So I do like to bring in a Fibonacci from that move. That was a major move. That's basically, not basically, that's what price action we're trading in at this point, right? I don't know why this always goes the wrong way. Right? So we can see we've got our 161.8, 50, 38.2, and 0. You can use the 78.6 and the 23 fibs. They're not as strong generally. Let's go ahead and just put them in here for you. And then I also color code this white just so I know what it is. And then I give it a title of 20 low to 22 high fib, right? That way you can hover on it and it'll tell you 20 low, 22 high fib. So, the 78.6 does have some price action there, right? 23.6 it's got some price action there as well. So you can definitely leave those on. But you can see all of the price action since 2020 has been contained in this fib, right? The major push up. And then the second fib I like to do is the major push down of 2022, the bear market of 2022, right? So there's that. Edit. And we'll give it this light color. And there you go. You can see how pretty much all of them line up. And what that does is give us, it just bolsters the fibs, right? The major push up and the major push down. Now, it was basically 100% retracement, so you can keep that in mind. But you can see how this drop in 2025, it didn't make it to the 2020 low. It bounced exactly off of the 2022 low. Well, not exactly, but basically off the 2022 low. So you can see some discrepancies where you can pick certain things out with the little differences, and it's really more on the lower time frames. That's not a good one. Let's see, where's the... But you can see some greater separation, which on intraday day trading, you'd be surprised that it is actually another target, right? So whether you want to leave it on there or not, I sometimes put it up there for when I'm doing shorter term trading. But if we look at just from the week perspective, if you just have the 2020 one on there, 2020 low to 2022 high, you're going to get some pretty major levels, right? And look at that stuff. Almost perfect. So that's really as complicated as it gets for me. It brings in some Fibonacci's, which I strongly believe in. Let's go max window, that way we can get more here. But you can see just how everything, maps out very nicely to those levels, which is, in my opinion, a forward-looking indicator, right? Because this is going to tell you this should be our next stop on the way up. This is going to be our next stop on the way up. If we, make like a higher low above here, continue to show bullish activity, then that should be our next target. It gives us something to shoot for, other than just the strats, where we would be shooting for like, let's see. This would be a target, higher high. This would be a target, higher high. Okay, say we breach this. What would be a reasonable point to possibly reject or find corrective activity? Here, right? Before we get to the top of this high, we could fake out some people. There can be people with, stops right here. If they were really good last year and noticed this was probably a reversal, It could have entered shorts, and if for some reason they were still in them to this point, this could be a stop loss for them. Could be a place for us to turn, right back around, stop them out, and turn back around, right? But anyways, I'm getting kind of rambling at this point. I just wanted to show how simple it is to set up these charts, maybe help you better follow my nightly videos. There are some other nuances that I bring to the board, including like the expected range for the week, the expected range for Fridays, overnight high, overnight low, previous day's high, previous day's low. Those are like the only other you know, indicators, quote unquote indicators, that I bring into play, and those are really only for intraday, short term scalp and day trades. So, for looking at it from a swing perspective, you really don't need to do that. Get that detailed with previous high day, previous low day, things of that nature. So hopefully this gives everybody a better idea of how I do my charts, and again, I hope it helps everybody follow my nightly videos. If you have any questions about the charts, if I've skimmed over any details too quickly for you, please let me know. If you like the way I do these charts, also let me know. If you pick up and start using any of my methods in your charting, let me know. It's always nice to know that you're helping somebody. We're not selling anything here, just giving our advice, experience in the market for at least a decade or over a decade now, and making things as simple as possible. We don't even need all of these things down here. We don't look at them. We can make simple trades just based off of these horizontal levels and broadening formations. If you look at my first video, I give reference to reference material for the STRAT, so you can recognize things like a 2-2 reversal, or let's see, what do we have, like a 3-2 up, 2 down reversal, things of that nature, that play along in my strategy, because of the STRAT is a big part of my strategy. It's a majority of my strategy. So those play into the broadening formations. The Fibonacci's are a little extra, but they help bolster targets that I've made from the STRAT and broadening formations. So do all the YouTube stuff, like, comment, subscribe. I hope this really helps a couple people, maybe 2, 3, 4, 5. But yeah, I hope this helps you all in your trading, and have a good night.